MicroStrategy continuing its Bitcoin buying spree, acquiring $2.1 billion worth of the cryptocurrency last week. This as the company's shares have fallen by nearly 60% in the last year. Joining me now, Phong Lee, Strategy CEO and President. Phong, it's great to talk to you again. Thanks for joining us.
Thanks for having me. Appreciate it.
So why'd you guys keep buying, and why buy in a larger amount than you had been recently, especially as effectively your currency, that is your shares, have been going down?
Yeah, look, 2026 is going to be a big year for Bitcoin. It's going to be a big year for MSTR. And as a result, the best thing you can do as you go into a big year is to start to build a strong capital base. And that's what we've done really over the course of the last few years, but we accelerated the last 2 weeks. The other big thing about 2026 is it's going to be the coming out party for Stretch, which is our preferred equity. We launched it in the middle of last year. It's grown up to be over $3 billion this year. And we think building a strong capital base with Bitcoin, a strong US dollar base, all those things are going to bode well for what's going to happen with Stretch over the course of 2026.
So Stretch and your other preferred share products that are yield producing instruments, they pay out cash dividends. In order to pay out those dividends, Bitcoin price would be more helpful if it was going in an upward direction than in a downward. So how do you sustainably pay those dividends without either selling Bitcoin or continuing to issue new shares?
Yeah, so a few things that we've done, right? We've built up a Bitcoin balance of about $65 billion now. We've built up a US dollar reserve of $2.25 billion. And that allows us to pay the dividends out over the course of the next 60 to 100 years. So we have now duration in terms of Stretch. In the short term, what needs to happen is Bitcoin needs to go up about 1.5% a year for us to continue to pay our Stretch dividends. So it's not so much a concern about whether we can pay the Stretch dividends. The question we have is how quickly can we grow Stretch? And here we have, to your point, a product that is backed by Bitcoin, that is short duration money, that is low to very low volatility. Right now, we're at about 7% vol. Over the last couple of weeks, we've seen it go below 5% vol, and it pays 11% tax-deferred dividends. So my concern is less paying the dividends, and how do we grow Stretch over the course of the next year? How do we market? How do we make sure everyone's aware that there's an option out there that gives people, whether you be low income, high income, low net worth, high net worth, you can get 11% on your money. And I think that's a unique feature that everyone is excited about.
Phong, have you guys turned so much towards Stretch because people aren't buying your actual equity at this point? I mean, as I mentioned, we've seen the big pullback. You're not trading at a premium to Bitcoin at this point. And there are more options than ever for people to invest in cryptocurrencies.
No, the reason we turned towards Stretch is we've been a levered Bitcoin company, right? And so if you think about leverage, what we've done over the course of the last 4 years is we've raised capital primarily through convertible debt. Right? Convertible debt is an illiquid over-the-counter market that has large spreads and isn't perfectly priced. And so we said, instead of something that is an inferior product, let's go to a better form of leverage we call amplification. So our equity, MSTR, is primarily there to build a capital base. But really, it's our preferred product, Stretch, which is there to create leverage and amplification on the company. And so that's why we've been focusing on Stretch, not as an alternative to our equity, but as an alternative to debt instruments like convertible bonds, which are inferior.
Phong, I've been talking to you, I've been talking to Michael for a while now, and I have to admit I still have problems sometimes wrapping my head around the business model because setting aside the business software business that you guys have and focusing more on the digital asset treasury, none of this produces any cash flow, right? Either the selling of preferred shares or the convertible debt, you're buying Bitcoin, so I guess I still struggle at times to understand the long-term sustainability.
Yeah, we're a company that's built on the digital transformation of capital. right? If you think of capital and original sort of great store of value capital might be gold, we're a company that's built on digital gold, which is Bitcoin. So I'll start with that. And so when you find a asset that is both a technological revolution and a capital store of value revolution, you buy and hold it, right? Not much different than real estate in the 1900s or oil in the 1900s. Somebody finds an asset that they think is going to, that is truly revolutionary, and they buy and hold it. And so an
Well,
analogy now that's been,
but if you're going to use those analogies, in the case of oil,
yeah.
eventually you sell it at a profit, right? And in the case of real estate, it is a yield-producing asset. You rent it out and you get cash flow while you own it. That's not the case with Bitcoin.
Well, what we provide to our shareholders is Bitcoin yield, right? You get more Bitcoin per share of MSTR, right? And so that is the yield. And I know it's a bit of a mental exercise to understand what's the Bitcoin yield versus earnings per share versus yield on your real estate. But I don't think that that's much different, right? And can we get cash flow by selling the Bitcoin? We can, but that's not in the near term future. Right now, it's an accumulation play. And so how our shareholders think about our equity is, are we providing more Bitcoin per share? And we do that by raising capital.
I want to ask you about some of the pending debt obligations as well, because I know because of the structure of the company, you guys, the convertible bondholders, are expecting stock that is worth a certain amount. There is a rather large gap between what the stock is worth now and what they have been promised. So is strategy, once that comes due next year, going to have to come up with that cash to close that gap? And do you have that cash on hand? Do you have to raise that cash in some way? What's the plan?
Yeah, so we have convertible bonds that come due at the end of next year that have a strike price, I believe, in the low 200s. And then we have convertible bonds that come due in 2028 that have a strike price that are north of that. You've seen our stock has been fairly far north of the $200 amount. So the likely thing that'll happen is as Bitcoin appreciates, we'll see our stock rise above that strike price next year and we'll equitize. If that doesn't happen, we have a couple of options. We could refinance the convertible and push forward the maturity at a future point in time, or we can just pay down the debt, right? And we could pay down the debt in one of multiple ways. We could issue equity, we could issue additional preferreds, or we could sell our Bitcoin. So I'm not too worried about the convertible bonds and their maturity that come due in 2027, 2028. These were long duration when we got into them. And Bitcoin price over time goes up. It's gone up 40% a year for the last 5 years. So
Well, but there's
I
a
think
lot
we're
of,
in a pretty good
it's gone
situation.
40% up a year, but there's a lot of volatility within that range, right? And so there's no way of knowing when that comes due if we're going to be at 90,000 or we're going to be at 40,000 or we're going to be at 150,000. There's literally no way of knowing. And you have to do sort of balance sheet planning based on an underlying asset that is extraordinarily volatile.
We do, which is why we have the convertibles paced out over time, right? They're laddered out. And if, first of all, I'm not sure that Bitcoin will go to 40,000, but if it does go down, we have a lot of options still, right? Like we have big picture perspective here. We have about $8 billion of convertible with a $65 billion asset base called Bitcoin and $2.25 billion of cash. Right, so this isn't like we're 2 or 3x levered and we have no way to be able to satisfy the debt obligation. This is we're in fact 10% leverage. You know, if you look at our convertible debt, or 15%. And so it's not really something that is going to break the company. It's something that, let's say Bitcoin was trading down at $40,000. It's something that will either push out the debt or we'll just pay it down.
And Phong, finally, you started the conversation by saying this is going to be a big year for the company and for Bitcoin. I'm curious what you see as the next catalyst for Bitcoin prices, right? Because we've not seen them do much of anything so far this year.
Yeah, I think there's two major catalysts that I look forward to. I think greater government clarity, right, through our Market Structure Act, which will hopefully pass in the next few months. And there's a lot of discussion, a lot of great work happening on Capitol Hill related to that. And two, which is linked to it, the traditional banking system, large banks who are sitting on the sidelines, who are working on technical projects, really ramping on either through the issuance of stable coins, the issuance of Bitcoin-backed lending, the issuance of or the creation of Bitcoin custody and exchange services. I think all of those will really open up. And I think we'll sit here a year from now seeing that not just the US government, but governments around the world and the traditional banking system fully embracing Bitcoin and digital assets.
All right, well, we'll catch up a year from now and probably before then also, Phong. Thanks a lot, appreciate it.
Thank you, take care.